Well, when I took a look at this deal, Martinrea obviously already active in Canada, the United States, and Mexico, but the acquisition of this division of this Mexican company put you in more countries than just Mexico. Was that sort of the allure of it?
Well, we're actually in Europe. We're in China. We're in South America currently, but not with our stamping and welding division, or what we refer to as metallics. So that particular manufacturing arm of the company only has existed in North America prior to this. So it does give us a footprint for that particular product in multiple countries now beyond North America, which allows us to meld it with our aluminum business, which exists in Europe, into what we refer to as our lightweight structures business.
So having this kind of geographic footprint and expanding it through this and solidifying in countries that you're already active in, how does that help you insulate in a time where, I mean, trade wars, they seem to whip up overnight? The President of the United States loves to use tariffs as a weapon, even when it is not a trade issue. Does this give you a little more certainty and spread geographically to avoid some of the pitfalls of that?
Yeah, well, we're in a good place related to that anyway, because we build locally. Far majority of our products are built in country or in region, so we do very little shipping from one part of the world to another, and so it hasn't really affected us like it does a lot of other companies. And this will actually continue that for the most part. The new locations basically build locally. With some exception, but in general, I think we're still pretty protected and will continue to be.
Now, protected in that sense as well. When I think about protections that a company tries to, form for itself, the way we approach the automobile, it's changing. Whether people want to get into ride sharing, they are talking about electrification, maybe self-driving at some point. But different parts of the world are sort of at different steps on that evolution to the next wave of driving. Is that part of it too? A geographic footprint allows you to supply?
This definitely puts us in a great position. One of the attributes of this acquisition is it widens our customer base, particularly with the Europeans who are, I would say, further along as far as marketing a lot of electric vehicles, at least on the high end, which seems to be where most people who are buying are playing so far. So there's EV work involved in that, and what's unique about some of that electric vehicle work, in at least a few cases, is they're blending or joining unlike materials, which is one of our key strategies. We're doing some of that locally as well. This will expand our capability there. So it positions us very well for EVs, but it continues to allow us to generate a lot from our core as well, with two or three, I won't say new customers, because particularly BMW and Daimler are already customers, but it makes them a much larger customer for us.
I want to talk about that collaboration, obviously, that's afforded by having these deals. Apparently this one today, the name BMW came up. It gives you a little closer to that automaker?
Yeah, like I said, they're already a customer, but certainly, this $400+ million of additional revenue, I won't say is divided equally, but is weighted very heavily toward Daimler and BMW.
In terms of further growing the company, I mean, I know ink barely dry on this one, but is Martinrea now in a phase where it wants to look for these acquisitions, build the brand that way, and start growing out? Or how much of a mix, I guess, will it be between acquisition and just the organic growth of the company?
Well, we're going to continue to focus on our organic growth, obviously, where it makes sense, and we'll continue to look at acquisitions where it makes sense. I think the key point of an acquisition needs to do a couple of things. One, it kind of needs to fit into our wheelhouse, which this did is about as good as you could. Expanding our customer base, and as you guys have heard many times before, we buy cheap. We're willing to buy things that are broken as well. Not that this was, but if it had been, and has been in the past with other companies, we find that's one of our strengths, is to be able to improve an operation. And we think now, with all our lean activity the last 5 years, we'll be able to even move faster. In this particular acquisition, actually, it's a good acquisition. Metalsa people that we worked with, they've got a great business, as you well know. This particular business was just one that didn't fit in their wheelhouse and fit in ours better, and culturally we were a good match. And so I think this particular acquisition will go particularly well relative to operational improvement.
Well, thanks for joining us today and breaking it down for us.